Hello, Bold Profits Nation, and welcome to the December month-end edition of Amber's Macro Monday right here on the Paul Mampilly YouTube channel. I'm Amber Lancaster. Thanks so much for tuning in. This edition of Macro Monday will be a forecast edition looking at some of the best investing opportunities for 2020. But before we delve into the Fab 5 economic charts for this month, Alex and I, this is my dog Alex, would love to wish you a very happy holiday, a Merry Christmas, and a prosperous New Year. And we do have a question for this month's Macro Monday. What is your stock investing New Year's resolution for 2020? So, Alex, what do you think? Is that a good question? While you think this over, let's begin. So Fab 5 chart number 1 is all about the e-grocery industry. I don't know about you, but I've been a very happy e-grocery delivery customer for about a year and a half now, and apparently I am not alone. This chart shows online grocery shopping sales are projected to reach $26 billion in 2020 and $29.7 billion in 2021. And all grocery sales have doubled since 2016 with no signs of stopping. So per Bloomberg Intelligence, quote, e-commerce will remain one of the essential retailer strategies in 2020 as demand for convenience and selection by consumers continues to rise. This includes online grocery sales, which are expanding rapidly. Consumer adoption of online grocery will continue its rapid acceleration in 2020. Access to both click and collect and home delivery is widely available to most consumers as Walmart, Kroger, Albertson, and others have quickly expanded the service. And repeat rates are strong. Online food sales have been a meaningful contributor to Walmart's overall e-commerce growth. The share of total grocery sales purchased online surpassed 6% in 2019, according to Brick Meets Click data. E-grocery is expected to account for a disproportionate share of food retail industry's overall growth, end quote. So Fab 5 chart number 2 shows us a fantastic new milestone for Tesla, and it will surely help sell more Teslas than ever before. According to Electric, quote, Tesla's supercharger network has reached 15,000, a new milestone for what is still one of the automaker's best assets, end quote. As this chart shows, open supercharger stalls around the world have soared from about 5,000 in March 2017 to 15,000 today, a threefold increase. North America continues to be the largest supercharger network, and it will grow even more as Tesla launches its Trans-Canadian Highway network. Having more easily accessible and faster charging stations in North America and around the world will help propel Tesla's car sales in 2020 and beyond. Why? Well, check out this forecast chart from Bloomberg's New Energy Finance Group. Electric vehicles will soon account for the majority of automotive sales in 2030. The majority, and that's in about 10 years. So Fab 5 chart number 3 is all about stock market sphere gauge or potentially lack thereof in 2020. This chart shows you how the CBOE volatility index, the stock volatility gauge known as VIX, is heading for its 8th straight year below its historical average, which is 19.15. So what does this mean? Well, per Jessica Rabe, co-founder of DataTrack, 2019 has been a, quote, relatively quiet year for U.S. stocks in terms of volatility. This year's reading through Thursday, December 19th, was 15.49, according to data compiled by Bloomberg. The VIX has averaged 19.15 since 1990 and is lower than the level for an 8th straight year, the longest streak ever. 2020 may bring further calm as long as U.S. and China make progress on its trade relations and the Federal Reserve holds down interest rates, end quote. Fab 5 chart number 4 is a telling 2020 retail forecast. Per Bloomberg Intelligence, in 2020, millennials will, quote, overtake baby boomers to become the largest adult cohort in America with over $200 billion in spending power, and that retailers must adapt to win wallet share of these young shoppers, end quote. As this chart shows, while Gen X folks spend more on apparel each year to the tune of $2,367, millennials' share of retail spending is expected to be 30% by 2020, and they, quote, remain the key demographic for digital commerce, spending more money online than most other age groups. Now, Gen Z, those born at the turn of the century, are projected to make up 40% of the U.S. population in 2020. They influence $600 billion in family spending and are estimated to have $44 billion in buying power, according to the National Retail Federation, end quote. So finally, Fab 5 chart number 5 is for the Bitcoin bulls out there. Please check out this pair of charts. So 2020 is shaping up to be a positive year for Bitcoin, all due to limited supply. As this chart shows you, Bitcoin supply is plunging, as seen by the declining orange bar charts. This is happening all while adoption for Bitcoin accelerates and gains popularity, the upward trending pink fuchsia line you see there. As this next chart shows, this is a recipe for Bitcoin to potentially bounce higher, reaching $10,000 in 2020 from about $7,100 today. This is all per Bloomberg Intelligence. So as 2019 comes to a close, I thought it would be fitting to share this tweet from Paul. For those who don't know, you can follow Paul on Twitter at Mampilly Guru. You can also follow me on Twitter at a Lancaster Guru. So Paul tweeted the following: I tell readers about new versus old in the stock market. New means companies have new ways of doing things, show massive growth, rising market share, consume and needs lots of capital, and so not yet profitable. Old is the stock market and its old ways of doing things, declining growth and market share. They borrow money to buy back stock, to use capital. Profitable for now. Their demise is certain, and timing is in the next 5 to 10 years. So buying old world stocks feels safe because many pay rising dividends while supporting their share prices with buybacks, using borrowed money, even as their businesses stagnate or decline. Buy new world stocks, it feels risky and dangerous because they are often new. They're unknown, unprofitable for now, and their stocks are volatile. So in 2020, Strong Hands Nation, as Paul reminds us, making money, it's hard. It's hard in the stock market because big gains happen over time. That means you must have the mental strength, the courage, the tenacity to endure through the ups and the downs, and ignore the daily calls from the media, your family, friends, that creates fear and anxiety and makes you feel like you need to sell. Well, with that, I must tell you that Paul has put together a video on the huge megatrend that in his #1 stock pick for 2020. So click the Strong Hands icon above my shoulder. You can watch the video right here. Thanks so much for spending time with me today. On behalf of Paul, Banyan Hill, and the Bold Profits team, happy holidays and happy new year. See you in 2020.